And welcome to the Market Alert for Friday the 18th of March 2016. And starting off slightly different today, I'm going to start with the daily chart because in yesterday morning's Market Alert I spoke about the market trading up to the 17,485, which of course rounded up is the 17,500 level, and that's where the market went to during yesterday's session. This is not uncommon. We saw this last week when Draghi spoke on Wednesday. The market was down, then they pumped the market all the way back up during Thursday's session. This is exactly the same for the US. Bit of indecision on Wednesday evening, bringing the market up, but yesterday really driving the market. Notice also again that the market's going up on fresh air. There's no major buying in this market at all. It is pure levitation that these prices are moving higher on. Given the backdrop of the market, along with the implied volatility moving lower, the buy side has been the best side, which again is something that I've mentioned during the last few weeks. So yesterday we saw the market open and move higher. We had the first trade where we saw we only managed to get 20 pips. The market didn't drive through the resistance area, the psychological level of 17,350, and then we had a potential sell signal which we saw the market actually lose on, and this is the first clue that the market didn't want to go down yesterday. This one stopped out for a 30-point loss, leaving us with minus 10 after the first two trades. We then had another buy signal. We see the market moving higher, this time with prices driving through the actual 20-point scalp there. You can see it driving through and then just trailing up there, gives us 36 points to make back the minus 10 that we were out of pocket with. Next trade, again another short, and you can see the effect there at the market stopping this one out. This actually then reversing, giving us the chance to reverse the signal for a 23-point loss on this trade as the market reversed and moved higher, and then eventually this one being stopped out as the stop was trailed, again driving through the 20-point scalp there and then through the psychological level of 17,500, and eventually coming back to give a net there of 40 points on this trade. So the market was determined to move high. You could see the shorts there, and the market on the overnight is stuck in the sideways range. It's like this 17,500 at the moment. You can see the market trying to be brought back up to this. It all depends on whether the market's got the strength to do this or not. We are reaching a point where there is some sort of major resistance in this market. So the question is, should you take the short trades? Well, now we've got the day after. We've only got one more problem, and I'm sure we've got some FOMC members speaking today, and we've got Dudley out at 1 PM. They're really bringing him out today, aren't they? Look at this. We've got Dudley at 1 PM. We've got 3 PM Rosengren and Bullard speaking as well at 6 PM. So they're going to intersperse these from 1 PM through to 6 PM. And that means that really I wouldn't be at all surprised to see the market move back to the upside and make a new high once more. Let's just go back to the daily chart and have a look, see where we can get a gauge of where this market's likely to go. And as I said before, they really do want the implied volatility down, so it looks like there's no risk in this market. So 17,752 along with this one in between, 17,626, only 100 points away. So it very easily achieved for the market. Let's just have a look at the bigger picture as well of this market. Let's just squash everything down. Let's just get rid of this, make a bit more space. If we go back to last May, you can see how much this market's actually moved. This is the all-time high. We've got some highs just here that go back to October when the market rallied off the August flash crash. So you can see how desperate they are to bring this market back to the upside. So we have got a bit more on the upside if they wanted to create some sort of a double, triple top in this area. and then see the market move lower. But certainly the implied volatility indicating at 12.54 yesterday, you can see another new low put in there. We're down, but now back down to where we had the August flash crash. So when the implied volatility goes down to the lows, to record lows, which we're not at record lows yet, 10% is the record low for, actually I think it's 9.75 to be precise, for the implied, then you get an explosive move in the underlying market being the Dow. And when the implied volatility is low, as you know, the underlying market will move to the downside. So you can see the market's gone up on levitation. The short trade yesterday failed. We've got a couple of, a trio of Fed members speaking today as well, which are obviously engineered. Yellen comes out, the next day the market gets a reaction, and then just to keep the illusion alive, they bring out 3 other members to actually, with the same rhetoric, just to pump the markets higher. This never used to happen. You know, I've traded the markets now for 20 odd years or more, and this just never happened. This is a new thing. This is bringing out the Fed members as if they become minor celebrities now, bringing them out, or Z-list celebrities, bringing them out just to put them on the business channels, just to keep the market pumped up, because obviously what people don't realize is the tax revenues from the stock market plays a fundamental part for the US government, and if the stock market crashes, they lose another revenue stream. And again, don't forget, in October they raised the debt ceiling in the US again by another $1 trillion. So they need all of the revenue they can get in order to keep raising the debt ceilings. Right, well, that's it for today. I will see you in Monday's edition of the Market Alert. Have a great weekend, and if there's anything to report in the meantime, I'll let you know. Other than that, thanks for watching. See you in the next one.